Now, I'm 33 years old and I've been buying dividend paying stocks and ETFs for about a decade straight. As of right now, my dividend portfolio is worth around $1.7 million, pays me around $116,000 per year in dividends, and around $9,700 per month. Now, over the years, I've learned a ton and I've made a ton of mistakes, but one of the things I'm most proud of is how I'm structuring, how I'm building out my long-term portfolio, which I think could be very useful, especially for newer investors watching this. So in today's video, I'm going to share with you guys the perfect dividend portfolio construction. I built this out all on my own. I'm going to share with you guys 100% for free, and I guarantee you this is going to help you with building out your long-term dividend portfolio. So if you want to see my entire perfect dividend portfolio construction, definitely stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Alright guys, so the perfect dividend portfolio construction is going to start off with index-based ETFs at the bottom. So the bottom of the portfolio, the foundation of the entire thing is going to have to be strong. Index-based ETFs, S&P 500 is my personal favorite, but of course the NASDAQ 100 too. Names like VU, names like SPY, names like QQQ, names that aren't going to offer you a ton of income generation, but are going to build a strong foundation for a long-term portfolio. Now, index-based ETFs make the perfect foundation because they provide broad diversification, lowering risk by spreading your money across hundreds of companies. They deliver proven long-term performance, survive in every market cycle while steadily growing. Their built-in rebalancing automatically removes weak companies and adds stronger ones without any effort from you. They also come with ultra-low fees, letting more of your returns compound over time. This stability creates a strong, reliable base that supports the higher yield layers of your dividend portfolio. Now above that is going to be dividend growth ETFs. Think names like SCHD, think names like DGRO, think of names like VYM, VIG. I mean, there's so many great dividend growth ETFs out there. Now, dividend growth ETFs focus on companies that increase their dividends every year, creating a rising income stream over time. They offer a balance of growth and stability. Because these companies consistently raise payouts, your income naturally keeps up with inflation. They also tend to include financially strong, profitable businesses that perform well across market cycles. This layer boosts long-term compounding while adding reliable dividend momentum to your foundation. Now above the index-based ETFs and of course the dividend growth ETFs, now we're getting into some of the higher income plays. Covered call ETFs, but that are index-based. Think of names like jepi or the NEOS NASDAQ 100 high income ETF. Names that offer high income generation, but still offer exposure to the indexes. Now out of these names, my favorite is SPY, but I do own all these names. Now, covered call ETFs that are index-based provide high consistent income by selling options on broad indexes like the S&P, the NASDAQ. Because they're built on large diversified indexes, they avoid extreme decay and single stock risk found in ticker-specific yield products, like we're going to talk about in a second here. They offer a smooth, predictable cash flow stream, making them ideal for income layers between your dividend pyramids. These ETFs trade some upside growth for steady payouts, creating reliable monthly income without blowing up your NAV. Overall, they're the perfect middle layer, high yield, diversified, and far more stable than single stock covered call ETFs. Which brings us into the next portion of the portfolio. Next up is going to be quality high income ETFs. Now this is going to be very subjective. In my opinion, certain quality high income ETFs are names like QDBO, names like BTCI, names like MEGI, names like Blocks. But again, these names are going to offer a little bit more risk, not necessarily super risky, but a little bit more risk. And of course, because of that, a little bit more income generation. Now, quality high income ETFs deliver strong yields without taking on the extreme risk or decay of single stock yield plays. These typically use diversified baskets of stocks or indexes, which keep the volatility lower and preserves NAV over time. These funds often combine smart strategies like option income, such as diversification or factor screens, to produce reliable, sustainable cash flow. They bridge the gap between pure dividend growth ETFs and aggressive high yield products, while still protecting the long-term health of your portfolio. Now, last but not least, the top of the perfect dividend portfolio construction is going to be the riskiest in my opinion. Single stocks and single stock ETFs. Think of any single stock across the market. Now, sure, certain single stocks aren't as risky as others, but still, when you're buying a single stock, you're placing all your eggs in one basket, so to speak. Also, think about single stock ETFs. Think of names like Tesla. Think of names like Misty. Think of names like Coney. I'm not saying these names are bad. I'm not saying you shouldn't buy these names. I'm just saying that they should be sort of the final afterthoughts after building out the different layers of your portfolio. So that's more or less how I've decided to design my 7-figure portfolio, focusing on index-based ETFs, then later on focusing on some single stock names, and of course some diversified ETFs on top of that. Now, I hope that was helpful for you guys, especially if you're newer to investing. Comment down below your favorite dividend-paying stock or ETF as of right now. Drop a like on this video if you liked it, subscribe, and I'll see you guys in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.